Welcome back to my channel. My name is Mel DeWeese, and today we're talking about how to protect your business and your people. I specialize in employee benefits and HR, and not every type of insurance is going to work for every employer. There are different stages to the game, and this week I've been diving into wellness and releasing a series on wellness over a couple of weeks. Today, I want to talk about what stages of the game you may be in and what type of insurance you may need depending on your needs within that stage. Startups and larger businesses, 50 employees, 20 employees, 100 employees, and what we typically see in the progression of needs as you work through these stages and grow through these stages. So, insurance versus benefits. I've talked about this before, but I think it's important to remind everyone that insurance is for catastrophic events, and benefits are things that improve our daily lives or make things a little bit easier. And the reason I bring this up is when I am talking to an employer, it can be very overwhelming, especially if they're brand new, startup, or just looking into benefits for the first time. And we're going over medical, dental, vision, life insurance, disability, workers' comp, general liability. It can be difficult for employers to prioritize where to start and what to do first. And I always say start out with insurance. Benefits can wait for most startups. Sometimes they don't because recruitment strategies and things like that. But for the most part, get the insurance stuff done first, work on the benefit stuff later. Meaning, health insurance is important because if we end up in a major accident, end up with a major illness, it can cost hundreds of thousands of dollars, which can bankrupt a person and a family, obviously. With dental and vision insurance, it's not as important because nobody went bankrupt over because they didn't have a $120 benefit for their vision insurance, you know? And I consider vision insurance not even really insurance, it's more of a benefit because most people don't, some people don't even use it. So you're going to set it up, and some of your employees don't even need glasses. And you're spending 3, 7, 10, sometimes $20 a month for a benefit that only gives your employees a credit of 120 or 250 for contact lenses or frames. It's not going to financially ruin you. I think of insurance as something that if you don't have and something bad happens, it's a catastrophic risk or a risk that sets you back. So the purpose of insurance is to protect against those events that could bankrupt you or your business or take you more than a couple of months to recover from. Okay. An example would be workers' comp, general liability, health insurance, disability insurance, and life insurance. Some people don't really think of disability insurance at all in the area of employee benefits, and it is extremely important. It ensures your employee's paycheck in case there is a disability. So if your employee gets hurt, whether on or off the job, and they can't work for 2 years, they file a disability claim. The disability insurance carrier will pay them, it's usually about 60 to 66 and 2/3% of their pre-disability earnings until they can return to work. Okay, and of course there's different policies and things. But that would be devastating, right? If you didn't have disability insurance, if you have an employee that didn't have disability insurance and that employee ended up becoming disabled, not able to do their own job anymore, it would be nice if you had an insurance where it could pay them until they can return to work. Benefits are the bells and whistles that improve daily life, engagement, and retention. The low bankruptcy risk, if any, it's more add-ons, more strategically aligned money that's being spent by the employer. Like we've talked about the different wellness strategies. It's not a tangible benefit right this moment, but over the long run, they tend to steer the culture of the organization or help. I would say it's not like a driver, but it helps certainly reinforce the culture, and it is evidence to the employee of the employer's values and what they're spending their money on. Examples would be dental insurance. The most dental insurance plans only cover $1,000 per employee per year. And $1,000 is nice, but it's not gonna protect you from going bankrupt. You go to the dentist, you have a $10,000 bill because, root canals and denture, or, nowadays you can go to the dentist and have a $10,000 bill. It's not crazy uncommon these days. And $1,000 benefit isn't going to go very far. If a poor employee goes in, they have dental problems, they get billed for root canals and a couple crowns, and they got a $10,000 bill, that's going to hurt. And especially if their employer only has a $1,000 benefit. I think we get the idea of the difference between insurance and benefit. The three-tier priority framework. So tier one is mandatory and critical. I put these benefits or these insurances under tier one because they're a legal requirement and there's a catastrophic risk, or you cannot operate without them. Tier two, highly recommended. It's not always legally required, but essential for protecting your business and your employees. And tier three, quality of life. It's not insurance, but it improves engagement and retention. Mandatory and critical. So the first three are workers' comp, which is usually mandatory in most states. Number two is general liability. It protects your business from customer and public lawsuits, and health insurance, increasingly important for recruitment and compliance. Again, it's not mandatory, but most employers do want to offer this to their employees, and most employees expect it at a certain point. Workers' compensation, the reality is it's mandatory. It protects employees' medical care and rehab and loss of wages when there's an injury at work. It protects you from employee lawsuits over workplace injuries. It covers 100% of the medical treatment for work-related injuries. Employees can't sue you for workers' comp covered incidents, and it's peace of mind knowing that you're compliant. All right. And the downsides are basically high, it costs money. Claims history affects your future claims. Sometimes you can't opt out. High risk industry pays more, of course. Premium is based off of payroll and your industry risk, and sometimes your claims history and non-negotiable costs. It's just required by law. General liability protects your business from lawsuits. So covered bodily injury, covers property damage caused by your business, covers legal defense costs required by many contracts and licenses and leases and some businesses. So if you go and you work for a government agency, they're going to want to see certain insurances in place, or you're doing bidding for certain jobs. One lawsuit without it could bankrupt your small business. So the downside is obviously costs. The additional annual costs. It's tough for these small companies that are trying to grow. Must renew annually. Doesn't cover international things. Medical history affects your renewability. Some high risk scenarios require additional coverage, of course. Health insurance. So employee retention is usually one of the primary reasons why somebody sets up health insurance. It's also usually when startups or smaller businesses get health insurance, usually the primary driver is one of the executives or usually the owner. The owner and his family or her family needs insurance, and setting it up through the business is the best way to go for some of these folks. And some find that they save money on a group plan, and or it's best to have the business pay for their health insurance rather than go through it privately. Tier two, highly recommended insurance, not always legally required, but it's really nice to have. And that would be the disability insurance, life insurance, employer liability, and an umbrella policy. So disability, it protects the employee if they lose their income because of an injury, either on or off the job. Life insurance obviously protects the employees' families. If the employee loses their life, the life insurance pays out to the beneficiary. Employer liability supplemental coverage above workers' comp limits, so it covers above and beyond the general liability and the workers' comp. An umbrella policy for all of it, wrapping it all up, catastrophic protection for extreme scenarios. Okay. Disability and life insurance protecting income and family security. Disability replaces 50% to 66% of the income if the employee is not able to work due to a disability from illness or injury. And downside claims can be complex to process. I don't think so. I don't think they're complex. It's usually a form, and there's a section for the employer to complete, a section for the employee to complete, and a section for the doctor to complete. Once the insurance company has those three items, they can start processing the claims. It gets complicated if the employee doesn't fill it out or that they don't get their doctor to fill it out. That's when it gets complicated. If everybody fills out their little section, it goes pretty well. Gives employees peace of mind. It's inexpensive. Disability and life insurance are pretty inexpensive. I think most people are pretty surprised. And what happens usually is one of the executives or the owner wants disability insurance for themselves. They start researching it. They go, oh, there's this disability insurance thing. And they talk to a life insurance agent, and life insurance agent starts quoting them disability and life insurance. And disability insurance is very expensive on the individual market. Life insurance agents love it because they make a ton of money off of it, but it's very expensive. And it's usually less expensive for the employer to insure their entire business, all of their employees, for disability insurance than it is for them to buy it for themselves on an individual level. You can usually insure the entire company. So getting a group disability plan makes a lot of sense for a lot of businesses and can be a really great benefit. Requires ongoing administration. Yes, the insurance companies, especially if your life insurance or disability insurance is based off of, well, disability insurance is always going to be based off the employee's salary. So every time there's a pay rate increase, that's going to adjust the cost. So every year you have to go into the system. We have to help you, it depends on your system. Are you going directly to the insurance company? Are you using your payroll system to help you communicate with your insurance carriers? Or do you have a separate ease or employee navigator system where you can update it there? You go in there, you update everybody's salaries and the costs will adjust. That's really the only administration that's required for that. It's not group disability and life insurance is not some crazy heavy administrative process. It's really not. Employees may not understand the value up front. This has to be talked about in their open enrollment meetings or in the implementation meeting when you roll this thing out. Employees should sit down and listen to a educational meeting presentation about what disability insurance is, what it covers, what it doesn't cover, and the dollar amounts that it will pay out. There's a couple of different ways that the employer can set it up. They can set it up to where payouts are pre-tax or not taxed. It can be more complicated if the employer wants the employees to receive disability benefits without taxation, because some employers, if they buy a policy that only covers 50% of the pre-disability earnings, it can be tough for somebody to survive off of that. So imagine your paycheck cut in half and then having to pay your car payment, your mortgage, buy all your food, especially now with inflation, gas, etc. That is really difficult. And then on top of that, you're disabled and you're going through an illness or an injury, and it's very stressful. It's a very stressful thought. But if the employer can make it where that 50% isn't taxed, okay, now we're getting closer. Or if the employer does 66 and 2/3 of your pre-disability earnings, that's your benefit. That's the amount you're getting monthly. If you become disabled, if you're getting closer to 60, 65% of your pre-disability earnings per month, and it's not taxed, Now we're getting somewhere. Okay, now we're getting somewhere where employees, if they become disabled, are not as uncomfortable. The idea behind making the employee uncomfortable through the disability process comes from the insurance side. Surprise, surprise. They want the people to be uncomfortable. They literally say this. They say they want people to be a little bit uncomfortable. They do not want people to get comfortable on disability. They do not want that. They do not want people staying on disability. They want people to get back to work. So many of these policies have a partial disability payout. So if an employee is, let's say, 100% disabled, meaning that they're getting their full disability benefits, sitting at home, not working, getting the 66 and 2/3 tax-free every month. Let's say on month 12, they come back to work and they're working. I think most plans usually has to be at least 20% or more. So they're going back to work for 4 hours, 3 days a week. Okay. That would be enough for a partial disability payout. So in that case, the insurance company will pay up to 100% of the pre-disability earnings, meaning that if the employer is paying the employee for 12 hours a week, the insurance company will, you can set up your policy where they'll make the employee whole. So if the employee is only, disabled and only able to went from 40 hours a week to 12, the insurance company is supposed to fill in that 28-hour gap to make them 100% of their pre-disability earnings if they return to work in a partial disability. So they're trying to encourage, with that type of policy, they're trying to encourage employees to come back to work as soon as possible, at least on a part-time basis, and get them working again. And this can be very, very beneficial. I do like that part of it. Obviously, I don't like only paying somebody 50% of their pre-disability earnings when they're disabled. I think that's awful. Getting as close to the 60, 70%, I think is more fair, especially if it's taxed. And if it's not taxed, I think that's great. I think that's really, really close because I think even if somebody's income goes down 10%, I think that sucks. I think that hurts someone. I do like it if they come back to work, they can get up to 100% of their pre-disability earnings, which I think is awesome. I think it's great to encourage employees to get back to work. Of course, the insurance companies like it because they don't want to pay out on disability forever. That's their incentive. Don't let them fool you. But I like the idea of it because it helps people not get as depressed. If people can't work or they're not working, they tend to get pretty depressed and it can be very hard if you're just stuck at home. So if we can help get employees out of the house back to work, it's good for the employer and it's good for the employee. And some of these insurance companies have programs where they can help make adjustments to the workplace, help pay for those adjustments in the workplace if the employee is disabled and not able to work. Let's say there's stairs getting, up to your office. Maybe they help you put in a ramp so that they can use their new wheelchair and get into the office. Or if there has to be special accommodations to the work area to accommodate the disability to make it so you can do your job even with the disability. It's usually just, maybe $1,800 to adjust the workspace, something like that. So the insurance company can help pay for those kinds of adjustments so the employee can return to work. So most of the time, this is just what I see in most situations. Startups with 1 to 5 employees, they prioritize workers' comp, general liability, and then consider health insurance. If a company is growing and they have between 6 and 20 employees, tier one is to complete, obviously they have all the tier one high risk insurances like workers' comp, general liability, and health insurance. They start looking at adding disability and life insurance and build towards a more comprehensive health insurance plan. Employers over 100 or 50 employees, most of them have medical, dental, vision, life, and disability insurance. Usually also have some sort of supplemental like an Aflac or Colonial, and start building towards more comprehensive benefits. Look at what other benefits can we offer or improving their dental and vision, life insurance, disability in new ways to bring more benefits to their employees and help with their recruiting. So with that, this is just a quick summary of how to build your foundation if you're just starting out with employee benefits and insurance. Insurance helps protect your business and your people. Insurance, build your foundation first. Start with the tier one coverages, like we talked about, add tier two, and then build your tier three for culture and retention and a long-term strategy. And with that, thank you for hanging out until the end. It would really help me out if you would like the video, write a comment, share it with someone, share it with all your HR friends. I'm here every week talking about different employee benefit strategies, HR, and employee benefits. I also have a link. This is my website that I created for you to make it super easy to schedule your free consultation with me. I am offering a free consultation at this time. If you schedule the consultation, we'll go over any questions that you have. We can review your benefits together. I offer a free consultation or free review of your employee benefits, meaning that you can send me your policy information and I will give you my opinion on what you could do next. No pressure. We can see how to bring your employee benefits up to snuff or modernize it or improve it some way. And with that, we'll see you next time. Bye bye.